That the Russians and the Chinese would buy gold.
And buy up gold in New York at $1,200.
Do want to buy gold as a, let's say, safety or security gold?
The easiest way to play it is just buy gold and sit on it, take no risk. The only risk is somebody steals it from you.
Short of war, I expect another opportunity to buy gold and silver, and if it happens, I hope I'm smart enough to buy a lot.
But gold over the last several years as well. You see the Central Bank of Russia, the Central Bank of China, a lot of times those are quoted, but even smaller countries around the world have been buying gold.
And the U.S. economy gets bad, people run and they buy oil, they buy gold.
There's a confidence that has eroded.
There's considerable uncertainty.
The economy is still weak right now. There's a problem. I mean, there's a problem that has to be solved. Something's got to be fixed.
This is gold, a yellow precious metal, atomic number 79. Used by humans for thousands of years for currency, a means to exchange goods, medical uses, and in recent times in circuit boards, cables, and computers. Gold adorned the tombs of the Egyptian pharaohs, glittered in the hands of ancient Greek athletes, and was held against global currencies like the US dollar for years. There is so little gold in the world that the entire supply currently in existence above ground could fit into a court at Wimbledon. 171,000 tons in a 10-metre cube above the court surface, if you can picture it, and around 50,000 tons left yet to be mined, and maybe more yet to be discovered. Nobody really knows for certain. 1 kilogram of gold can fit inside your smartphone. It's dense, does not tarnish, and is soft enough that it can be worked and put into smaller pieces. Humans have fought over it, killed to get their hands on it, and still treasure this metal today. To this day, it remains as valuable as ever, still worn as a symbol for status, but mostly now held by the world as a commodity. Traded back and forth every day as a means to fight against inflation, a store of value that has grown over the past 20 years from less than $10,000 per kilogram to more than $55,000. It's strange when you think about it, how we value something like this. It's not like a company stock where there's a business behind it. It's not like a house where you can live in it. It's not like oil or lumber. You can't fuel your car with it or build anything with it. But with its value, you can buy whatever you desire. The question I wanted to answer for you today is, should you invest in precious metals like gold or silver, or is this asset really a thing of the past and a thing linked back to old money? And then as a follow-up question, if you were to buy this asset, what would be the best way to get yourself exposure to this market, especially gold, without having to build a vault in your shed or get yourself a massive security deposit box down the bank? Gold is an asset class that's seen as very much a safe haven, a place where money will flow when especially inflation and volatility is rampant, and especially when we think about fiat money or paper money, gold is seen as a safe place to stay. As governments around the world cause inflation by printing more and more of their own money, by buying up more and more of their own bonds, this increases the amount of money supply and then in turn increases the amount that we pay for different goods and services. Gold, however, on the other hand, is not something that we can just print and make up as we go along. It has a finite supply. It takes an incredibly long amount of time to be able to get gold out of the ground. Is an expensive and long, laborious process, so we know that gold is relatively stable in its supply. Therefore, with gold, the basic tenets of supply and demand take hold. If the supply is limited in gold, but the demand rises as inflation pushes up the amount of money supply, then gold, in theory, should then rise. According to lots of professional investors, we should own every single asset class to give us a really nice, well-balanced, diversified portfolio. And this includes commodities, especially ones like gold, oil, or anything really in short supply, anything that will potentially grow with inflation, to make sure that we're at least beating it, with the ultimate goal to make sure that our wealth actually grows over time, otherwise we'll end up losing money. Gold has a very prestigious place on top of the commodities section, and of course other commodities could include things like oil, coffee beans, lumber, you name it. Anything that can be traded back and forth in a day, or anything bought and sold during periods of economic booms and busts. Historically, gold has performed extremely well during crazy volatile times during the stock market and has actually enabled its owners to do very, very well during these periods when other people were hemorrhaging money because they bet too much on the dot-com bubble. If we take that period of instability as an example, if we just look at what happened between 2002 and 2007, gold prices continued to rise, whereas the Dow Jones Industrial Average just continued to pretty much flatline. So those people who had a well-diversified portfolio were still making money when everyone else was losing it. Furthermore, during the 2008 financial crash, gold behaved in a very similar way, and again when people were losing money, gold made some steady increases and some steady gains to make their owners very wealthy indeed if they'd move a lot of their assets into this safe haven. So over the last 20 or so years, gold has performed very well. But what happens when we look and take those timeframes a little bit shorter and maybe reflect on what's happened in the last 10 years? Well, if we take our time horizons down to 10 years, just a little bit shorter, we would have seen that the gold price per ounce has gone from around $1,600 per ounce to around $1,700 per ounce, and that's in a total 10 years. Surely, with all of the rampant money inflation and money printing going on in the world, that gold should have been a safe haven during that period, and during that last 10 years, surely the price of gold should have increased more than it has. That would make a lot more sense. Well, that suggests to me that there's something else going on, and this is really where my skepticism comes in and where I think long term about whether gold can maintain its place as a safe place to store your money. Because regardless of what it's done in the past, as we all know, the past performance of something is not necessarily a good indicator of what it's going to do in the future. And really, I want to be thinking, what's gold going to be doing in the next 10, 20 or 30 years, regardless of what it's done in the past? Because the era we're entering into is very, very different. So here's how I see things. Gold has been a really important asset class and a really important commodity and will probably remain that way for a number of years. And of course has an extremely long history going back thousands of years with humans. We all understand it, we know how it operates, and many people are familiar with it too. But if we take the last 10 years for example, if the price of gold hasn't been increasing, then that means the demand must have been fairly flat. So where has all that additional money gone that's been printed into the economy? And that's really where my head goes and where my thought process goes, and that's how I try and understand and try and work out where the growth's going to come from over the next 10 or 20 years. If this yellow metal is losing its appeal, then where is that additional money going to? And are investors seeing this asset class as a safe place to put their money like they would have in the past, maybe 10, 20, 50 or 100 years ago? Gold's value ultimately comes from our belief in it. We are used to it, we've been operating with it for hundreds of years. We understand that it's finite, we've made instruments to be able to invest in it. Everything makes sense. It is physical, you can touch it, you can use it, you can do whatever you want. You can probably eat it, but I don't think it would taste very good. And you can eat it because lots of people who have too much money on their hands like to go to expensive holiday resorts and either put it on their tea or coffee or even put it on top of their steak. It's a true story. However, if the next generation of investors and individuals and retail investors like you or me, who will ultimately end up working at institutions and big banks, no longer see this asset class as somewhere trusted and that can be a good store of value, what does that hold for this asset class moving forward? In my opinion, one of the biggest challenges to gold is going to be its digital cousin, Bitcoin. In the cryptocurrency world, Bitcoin is a deflationary currency. We know its supply will be finite at 21 million coins. And although we're a little bit way off yet, and we've still got many more to mine, this can be infinitely divided. We know its supply is safe, and we know that potentially this is a better store of value than gold can be. There's no bricks to move around, it's all stored in computers, it's all decentralized, everyone has a copy of the ledger, and means anyone can invest from around the world. If more people want to buy something than sell it, the price will go up. That's just simple economics, pure supply and demand. Regardless of whether something is physically useful, whether it brings enjoyment to us, if there is less supply and more demand, the price of something will go up. NFTs, artworks, vintage sports cars, old Ferraris, even designer trainers. All of these things in demand from their owners, potentially just bought because in 10 years' time, they're thinking this could be worth more than I paid for it. All of these things can and have changed hands for millions and millions of dollars by their owners because one person agreed to pay one amount to one person at one time. And if you think about sports cars, for example, these old vintage sports cars, of course we know they can't be made again, but really most of these will end up probably undercovers in some weird old garages somewhere, never to be driven ever again, with the owner keeping them because he thinks, and they think, that they're going to go up in value. So is the true value of something really just what one person wants to agree to pay to another person and how we view it? And if more people agree that the value of something is worth more, then the price of that will go up. That is just simple supply and demand. Therefore, something like gold could potentially be knocked off its perch by something like Bitcoin or maybe some other asset if more people agree that it's worth more than in what it currently is. Anyway, with that said, I do think gold is still going to be an important commodity over the next 10, 20, 30 years. So let's say if you did want to get some gold in your portfolio, what would be the best way to go about doing it? Now, for full disclosure, I don't own any gold at the moment and probably have no plans really to invest in any gold, but that is purely down to my own personal financial position, being a relatively younger person who wants to invest for the long term, and I'm less concerned about stability and more worried about growth. But of course, if I had millions of pounds worth of portfolio to protect, then I would certainly consider gold as a place to make sure I preserve that capital rather than lose it all. So we've got a couple of options when it comes to gold. Of course, we could physically own gold. Now we could either order something online, or of course we could even order something from these dodgy TV adverts that you see when your nan's watching the TV. Alternatively though, and I think a more sensible option, would be to get exposure to gold through some kind of exchange traded fund, which means that you can just buy in for a very simple, low fee and make sure you get exposure to the asset class without having to physically worry about where you're going to store the gold. Now, because this asset class has been established for a really, really long time, there's a ton of options out there to give you proper exposure, and I'll give you a couple of options now to look at. You've got options across all of the precious metals, everything from gold, silver, platinum, palladium, you name it. You can buy an exchange traded fund that covers this market to give yourself proper exposure. Some of the most popular gold ETFs are the following, and we've got a couple here. One is the Invesco Physical Gold ETF that has a ticker symbol of SGLP, and then also one by BlackRock, which is the iShares Physical Gold ETF. This has a ticker symbol of SGLN. Both of these funds look relatively low cost at 0.15% and have almost $10 billion in them each, so there's lots and lots of money pulled in here with a relatively low fee, which means you can get yourself the exposure you need with the right amount in your portfolio depending on your personal current requirements. To get hold of these, just go for your favorite broker platform. I've done the due diligence and make sure that they are available, for example, on platforms like Freetrade, not behind their paywall. So if you wanted to open up an account on Freetrade, there is a link in the description below, and you can fill your boots with as much gold ETF as you want. Just go ahead and follow that link. We'll both get a free share up to £200 anyway. I really hope you've enjoyed watching the video. Do let me know in the comment section below if you're either invested in gold already or other precious metals, how much of your portfolio you might invest in gold. Are you looking at these sort of things in the future and maybe diversifying your portfolio a bit more? I've certainly considered it a bit more and trying to think about how well diversified you can be, because of course the more diversified you are, the more protected you are from those ups and downs which are inevitably coming in the future. Anyway, drop me a like if you found the video useful or just funny or whatever, and I will see you guys in the next one. Subscribe for more, and happy investing.